Sumer Ansari, and I will be your host for today's event. The NBF Knowledge Series is an annual program of high-profile events that bring together the leading business minds in the region to share their insights and experiences, thus empowering you with the knowledge you need to succeed. The event, which is presented in partnership with Refinitiv, provides a platform for an open discussion. Our clients come together for an opportunity to network and hear from the leading experts in the industry on the latest market trends, challenges, opportunities, and threats. Globally, we face many challenges: supply chain bottlenecks, high inflation, increasing interest rates, roaming energy and food crisis, and volatility in commodity prices, to name a few. However, as most of you would agree with me here today, in the UAE, we have been able to largely avert the impact of global instability, rather benefited from the accelerated growth due to hugely successful vaccination drive, expo-infused spending, a recovery in oil prices, reduction in government fees and cost of doing businesses, accommodative monetary policies, reforming investment, visa, employment laws. These are just a few examples. The measures have definitely propped up consumer and business sentiment, thus will positively impact the economy over the next few years. Further testament to stability is the expansion of environmental, social, and governance criteria. These are broadening in scope and influence to cover all economic policy sectors now. The topic has been gaining momentum and expected to accelerate in the coming years. However, the uncertainty remains. The disruptive power of technology presents itself as an opportunity and a threat. It is at the forefront of corporate strategies due to investor, customer, and regulator expectations. Shifting market dynamics, cost of borrowing, and tighter than ever margins continue to be a source of concern. Businesses are having to navigate a new operating environment where hybrid working models have become widespread. In that sense, we found it befitting that today's event be themed as Unlocking Opportunities, Leading Change. The event will consist of two sessions led by experts. The first session, leveraging digital technologies to create opportunities. Second session, embracing a new operating environment. We shall explore the topics in detail and aim to impart knowledge and insight to help you overcome challenges and maximize opportunities, so that not only your businesses benefit, but we as a bank can also play our role in helping you navigate this change and unlock untapped opportunities. Thus, we hope to make today's session as interactive as possible. We encourage active participation and expect that you take maximum advantage to interact with our speakers and, of course, to network with your industry peers. Without further ado, may I now invite National Bank of Fujairah's Deputy CEO, Mr. Adnan Anwar, to share his thoughts with us. Please, Adnan.
Thank you, Mark. Well, dear clients, customers, partners, I'm delighted to welcome you. It's been a long time we have met all of you in person, and finally post-pandemic, and hopefully it's behind us, we are together. So a warm welcome and thank you for making time together. One of the positives which we all can draw from the pandemic, that we all became much more resilient, flexible, adaptable. And clearly technology and acceleration of digitalization is reshaping and transforming some of the things and some of the way we have done things in the past. So I'm sure that today's session, I look forward how experts and yourselves will discuss and come up with some new thoughts. At the same time, while we are coming out of pandemic, as if pandemic was not tough enough, the world and the challenges which surfaces, inflation, geopolitical conditions, Russia-Ukraine situation, China, Taiwan, growth rates, interest rates, all that combined means what? More uncertainty, which together we have to manage and navigate. So we thought how we can add value to our customers and come together, and in partnership with Refinitiv, we thought to organize a bit more tailored knowledge series event for our customers, and we look forward to your feedback post this session, whether this is helpful or not, A platform which allows experts, customers, all of us to come together and share thoughts. And I'm sure all of you have been successful in navigating in some shape and form in the last couple of years. If we exchange ideas and views together, we can navigate these uncertain times in a much better fashion. I promised I will not take much time because there are experts and yourselves who I would like to hear more. But enjoy your day and session. The relationship and business teams are also around in case during your break and networking sessions you want to share any thoughts. We are there for you. We wish you a very pleasant day and we look forward to your feedback. Enjoy your day. Thank you very much.
Thank you so much, Adnan. This brings us to the first session of the day. As I mentioned earlier, we'll try to make it much more comfortable, very interactive. Please take advantage of the panel discussions. The panel discussion will explore the impact of digitalization on businesses and consumers. We shall deliberate how companies can wisely leverage digital technologies to gain competitive advantage and capture the emerging opportunities. Please allow me to introduce our moderator and a fantastic host himself, Mr. James Faulkner, Director of London Stock Exchange Group. To the stage, please. Mr. James will be moderating the first session. So James has an extensive experience in digital space. Besides the London Stock Exchange Group, he has worked with Thomson Reuters and Refinitiv more recently. His skills in business strategy, business development, and business transformation in multitude of industries are commendable. James has driven businesses and professionals towards real success in the complex digital space. Next, I will request our panel participants to join us on the stage, please. All panelists are experts and renowned names in the digital world. Mr. Friedrich Biesberg, SVP, Digital Transformation and Innovation for Martin Insurance. Mr. Hans Christensen, Senior Director, Technology and Entrepreneurship, Dubai Integrated E-Commerce Authority. Mr. Ismail Yarouz, Chief Technology Officer for Financial Industry, Huawei Enterprises Group, please. Please allow me to thank all of you for taking time out of your busy schedules to be here with us today. James, over to you, please.
Thank you very much. I hope everyone can hear me. Good morning, everyone. Thank you very much for joining. It's a pleasure to be here at this glorious event, and I must say before we get started with this panel session, I was outside watching everyone speaking, conversing, smiles, laughing, interacting, and that's exactly how it should be. It's back to the pre-pandemic days, and it's funny, I've seen some people maskless now, without masks, and oh, that's what you look like. So thank you NBF for arranging such a wonderful event, and I do urge you to be curious, share best practices, speak, build ideas, share intelligence, share knowledge. That's exactly what this event is for, so I urge you to do that during the coffee breaks. So the first panel session today, this is leveraging digital technologies to create opportunities. We have an esteemed panel of guests, so without further ado, I'll get cracking. I was going to say you can introduce yourselves, but I mean, I think looking at the big screen, it's pretty much there and it's quite obvious, so I'll get straight into it. And instead of just keeping it with one person, we'll be bouncing across each other. So Hans, we'll start with yourself. Obviously an entrepreneurial expert within your field, leading one of the largest tech ecosystems in MENA. How would you say that you're seeing these young and existing businesses use digital technologies and thus to create a competitive advantage?
Okay, so first of all, thank you very much for having me here today, and welcome to all the guests. I would say, I would actually change the question a little bit. It's not just about the young startups, how they are using this technology. I think it's very apparent that big multinationals and banks are struggling with their innovation. So where are they looking? They are obviously looking towards the small startups. So the startups are the ones that are going to innovate the big corporates. And I think we are living in times where the startups have more options and opportunities than ever before to disrupt and to disrupt the established industries, especially the banks. If we look at the last quarter of investments here in the GCC, I think there was about 400 deals in Q3. Still, about 25% of those deals are in fintech. So that just shows me there are crazy opportunities within the fintech area still to disrupt the banking industry, especially. Now, I have come across some really interesting startups over the past couple of weeks, and I just feel it's taken off more and more. I was in Armenia last week, and I met a guy who has been working for 5 years on make computers much faster, kind of competing with quantum computing, but with regular computers. Now, this is something that could become a decacorn or centacorn if it comes out. So we asked him, could we maybe invest in his company? And he said, well, I'm doing a big test with Google in Armenia right now. So that means it's too late, right? So you need to, I think there are some gems out there, and my recommendation to the multinationals and to other SMEs would be to really have a team that is snooping around and checking out these startups. There are some amazing gems, and they have more power in their hands than they have ever had, and they will come out with something revolutionary. So yes, there are tons of opportunities in this area, but you need to know how to find them. You need to know you need to have an engagement team to harvest off this. One other thing I want to mention, which is very important, we just had our guys at TechCrunch, was it a week and a half ago in San Francisco, and they talked to some multinationals and some big VCs. What's going to happen now, and I think this is something that's of interest for everyone, right now a developer in Silicon Valley costs around $500,000. Now this is really, it's too much. And Google, Alphabet, they all know this. So, and the valuations of the startups is depressed. It's pressed down. Why? Because the startups cannot hire a developer for $500,000. That's impossible. So what I think is going to happen, and this was the confirmation of my guys, and I think this is the important message here, is that Alphabet and Google, they're going to shed 10 to 15% of their workforce over the next 6 months. Wow. That's going to flood the market for the really high-powered startups who have the disruptive technology which the corporates need. That means then they can turn up their engines, produce more innovation at another huge cost, which then the big multinationals will harvest innovation from. These are the dynamics. So correct me if you invite me in 6 months, you can tell me, Hans, you were completely wrong. But I actually think this is going to happen. And why is it going to happen? Because there's tons of money out there from the VCs. They want to pump more money into the startups, but they need the startups to have the enough talent to actually produce this innovation. And they want, of course, to see the valuations going up again.
Yeah, very, very interesting. I do believe that NBF are going to be hosting more events in the future, so be careful what you wish for, Hans. In 6 months, people are going to be coming back. So you said this.
James, may I comment?
Yes, of course. Because we wanted to be interactive.
Okay. Good morning, everybody. Very interesting, and of course, the scouting of the startups is important for incumbent banks, insurers. Now, I'm from the insurance industry. So I've been working with the concept of insurtechs in insurance for the last, 10, 12 years, and I've heard most insurtechs say we're going to disrupt the insurance industry. And I've heard a lot of fintechs saying we're going to disrupt the banking industry. I haven't seen that disruption yet, to be honest. There are some companies who claim they're disrupting, but if you look behind the scenes of what they're doing, they're not really disrupting. They're creating a new distribution channel like Lemonade, for example. My point here is, I think the disruption comes when the incumbent companies, the large corporations, they find a way of enabling partnerships with the startups. I've seen so many insurtechs and fintechs come to the banks, come to the insurance companies, and the insurance companies, they see the technology and say, wow, we want this. And then it clashes with the technology infrastructure in the insurance company or the bank, simply because it is old legacy systems that they don't know how to connect this new technology. So my point here is, because it was really interesting what you were saying, yes, be on the lookout for what's happening in the industry. You are obligated to do so, but don't forget to look inwards as well, because you may find the perfect partnership from an insurtech or a fintech or any startup. Yeah. But if your company is incapable of partnering with this company, it's worthless anyway, right? Yeah. And this is not only technology, this is culture, this is the bureaucracy, this is red tape, this is organizational silos. All these things will be challenged significantly if you find the right startup to work with. Thank you.
Yeah. Very interesting, Frederick, thank you. Which brings me on, I'm curious, so for the audience, and so what are the benefits of creating a digital first business model, and would you say is it for everybody?
For me, a digital business model is nothing but just thinking digital whenever you do things in your business. It's very difficult for me to think of any companies that shouldn't be doing that shouldn't be working with digital for whatever initiatives that you're doing. And obviously, following what I just said, along those lines, if you are thinking about how you work with the world in a digital sense, you will find your organization more challenged than you originally think, because your organization, at least if it's a decade or more old, it will have troubles being agile enough to adjust to what's happening around us. Now, we've heard so much about the pandemic sped up digitalization and everything, but to be honest, and I may be a little provocative here, but to be honest, what I've seen companies do is stretch the rubber band. So they've simply just taken whatever they have today and put some power to it and go, now we're digital, right? They haven't, the processes behind have not changed. So they're just stretching because they don't know how to do these more profound changes. And I think if you're in a place where you actually have the luxury of doing something new, yes, you cannot not think digital automation, data quality into what you're working with.
Yeah, very interesting. And by the way, this is great so far, but I'm loving this. There will be Q&A at the end, so if anyone has any questions, then you will have your opportunity to ask questions at the end of the session. Mr. Ismail, so digital transformation narrative, how has it changed over the last decade and what does it mean today?
Okay, so working with the bank, so I'm going to put it at two aspects, from the SME's perspective and from the banking perspective, right? Mm-hmm. So 10 years ago, maybe a little bit more than 10 years ago, if the banks had a mobile banking, they were saying, we are digital, we are engaging with the customer on the mobile sense. We have the mobile channels open. But right now, it is changing right now that it means the banks are trying to give a different customer journey to the customer, right? If we hit the pandemic, all the branches of the banks were shut down, and some of the banks that did not engage with the customers in a digital way to enroll them, they were okay. We need to pump it up, and we need to change this customer journey to our customers, right? So now the digital channel, of course, mobile channel is of course important, but the customer journey is changing, right? Back in the days, you needed to go to branch to get things done, to sign some papers, and to finish your transactions maybe. But right now, the banks has to have other digital channels to your identity, the country's identity section, to verify this person is real, or other SMEs to engage them into their mobile channel or the mobile application that we are talking about, right? So what we've seen in different countries, Africa, Asia, and Europe, that the mobile channel of the banks changed from just logging into an app. It changed to a journey. When you log in, you see services from the bank's perspective, right? You can have a booking.com ticket, just bind it into your mobile app. Or, I don't know, a grocery shop will be there. Or any restaurant that, has menu inside. So from the SME's perspective, this digital journey that we discussed, right? So at the end, banks will be providing these financial transaction services no matter what. And from the SME's perspective, they need to bring their digital channels much and more and create, it will be a little bit technical, but create an open API connection to the bank services to bring their services into bank applications or at the same time to the online world, right? A simple example, you go to a restaurant in some advanced countries right now, you don't even interact with the cashier anymore. You order from your cell phone, your order ticket is there, the system is integrated, your transaction finished there, you don't need swapping card or anything like that. And then you receive your order to your table. Everything is online, transaction is online. And of course, it both gives benefit to the bank and also the journey of the customer at the same time, right? The second step will be having this digital engagement more and more coming into our life, right? Then the data comes in. And what I believe that the most valued asset nowadays is the data, right? If the companies are growing really fast and big, then to make a crucial decisions on something, you cannot be blind and make a decision and hope that it works. So gathering the data regarding your customers or regarding your customer sentiment and make a decision upwards to your customers, either for precise marketing. If you know your customers, you will give them the best product they want, right?
Yeah.
Or the sentiments that we discussed. Your customer is mad, your company is big, same thing for the banks also. The guy is tweeting from Twitter saying that, I'm mad because of this and that, but you cannot respond well, then that will be an issue, right? So the value of the data, gathering the data and creating a value to your business and your customers would be also crucial from my point of view.
Very interesting. Thanks, Ismail. Thank you. Moving on to yourself, Mr. Hans. So what digital solutions, technologies would you say are achieving explosive growth at the moment and securing the biggest investments?
I'm trying to remember the big deals that have just happened. I think there was one a 200 million deal, but I don't think it was in finance. Still, what's it called? You saw Bit Oasis, maybe? Bit Oasis just raised 30 million. I hope it's okay if I talk a little bit about crypto. And I mean, the UAE is gearing up for this now, right? So Vara just came out with some guidelines. I think any business that is in that space, which is super hot, it's heating up again now because we are looking more at the tokenization of virtual assets. That is definitely going to be one of the big hitters, and I think this is maybe for the banking industry is a little bit not their favorite subject, but I do think that's something you need to look at. We are looking at, in Dubai Silicon Oasis, we're looking at starting with tokenization. What are the opportunities? There are enormous opportunities. We think you can tokenize real estate.
Okay.
Imagine the possibilities once you have tokenized real estate, what you can do on the loan front once you have tokens. There's huge opportunities here. There's many other things you can tokenize as well. For instance, one thing that I'm particularly fond of, which I talked with the DFF about, is tokenizing shares. Imagine tokenizing shares. What if you have a platform where you have the shares? How are we handling shares today, the free zones? It's a very cumbersome process. They have to send me a letter saying I want to change these shares from A to B, to this person, to that person. It takes a couple of days or it costs money. That could be instant. That shouldn't take more than a second. So I think there's some huge opportunities there. Another thing I also think is very interesting is I was talking to a startup who is unraveling the loan, checking if somebody is ready for a loan from a completely different angle. What is the angle today for banks? They look at the KYC, maybe they run them through CID, what have you, to check if they're clean. No, these ones have an algorithm that checks 80 different points on that person, if that person has ever done anything wrong and everything, and it's almost instant.
Wow.
And it's so much more accurate. So they can give loan to a person who has been running through this system, which is instant. You don't need to let the client wait for weeks if you can get if it's credit worthy or not. You know, this is the kind of things that that's going to come out there, and then there's going to be maybe a small startup that starts very small, offering this, and then suddenly it's going to be big. And you need to be on lookout for these things because they can really disrupt the industry the way we know it. Some other industries, I agree with you with Frederick, some have not really disrupted it a lot, like Yalla Compare. We invested $1 million in Yalla Compare. Have they really disrupted the insurance industry? They're facilitating the sign up for different I think car insurance, and they're branching out a little bit. It was a nice way of how you can compare one insurance with several other insurances. It was fast, it's pretty efficient, but it wasn't really, it didn't really do anything on the terms and conditions of the insurance itself. So there's a lot you can do there as well.
Correct, yeah. And it's a good segue into yourself, Frederick, then. So you talked about insurance. Whilst building a digital-first organisation at Demand Insurance, what challenges are you seeing? How are you overcoming them?
That's a long answer. I think I think I actually already touched upon it a little. When you are looking into changing a company towards a digital-first or digital culture, you will have, especially when it's in financial services and it is more than 10, 15 years old, you will have your silos, you will have your bureaucracy, you will have your ways of doing, you will have a legacy system in your technology architecture. And all these things, like it or not, they pay against you. I'm not saying there's any colleagues who don't want this to happen. I'm just saying this is my silo and you're not going to touch it because I'm rewarded after what's happening in this silo. So when you come and want to change things, I mean, digital first typically is, at least to me, is automating and optimizing the way a company is working using digital tools. And if you want to automate or optimize anything, most likely you will have to go across various teams and business units because you're looking at, as you also referred to, you're looking at the customer journey. And the customer does not care what team he or she is being treated in that moment. The customer cares about how simple can you make my life, especially in insurance, right? We don't have the best reputation in the world. So what we have to do is just to make sure that whenever our customers or policyholders, they interact with us, it is as absolutely seamless and simple as possible. And that means that you will go and knock the doors on the different business units and say, we probably have to change the way you're doing business. And then you're dealing with hundreds of people who have to change their habits. And changing habits as a human being is probably one of the most difficult things ever, right? But this is actually what has to happen, because we can come with the smartest tools in the world and the best solutions and the most disruptive technologies, but if people don't want to change the way they work, it doesn't work anyway. So I think the fact of respecting that people don't like to change because they're worried about their jobs, because they're worried about things, and maybe they're also worried about their own capabilities, that they actually know what the company now demands or expects from them. And I think when you realize this and take that as a point of departure, your life will be easier. It's not going to be easy when you do these kinds of transformations, but your life will be easier simply because you start with the people and bring them along the journey, and you will find they will have a lot of valuable input that you need, but they're only going to give you that if they feel that they're comfortable with you in the journey. So I think for me it's much more culture and processes than it's technology. Technology is vital also, but it comes second.
But is that human? You mentioned people, you mentioned the human touch. Is the human element diminishing now that you talk about digital first? Does that mean that there's going to be less human interaction?
No, I don't think so. But I think the way, a simple example is, for example, how you work with a call center and people calling in. Now, what you try to do, and I can tell you nobody wants to call an insurance company. People only call us when they've exhausted all other opportunities. They go online, they call their friends, they go to church and beg, they do everything like that. But at the end of the day, then they call us, right? So we have to make sure that when they call us, first of all, we have to make sure that there are as many digital opportunities for them to avoid calling us as possible. This is where digital first come in. Use simple, and I'll get back to this, simple chatbots, FAQs on your website, simple things, but respect, back to the human element, respect when people actually call you. Don't give them a personal voice assistant. Don't give them 5 or 10 press this or
Options.
No, not in our business, because people, they don't want to call us. So respect that when they call us, they've exhausted everything, right? And this is where I feel that the people element is becoming very important, because there you need a person picking up the phone pretty fast and being pretty smart in helping the person, because they will only call when they have problems that the app or the website can't solve, which means that you have to upscale the people that are answering the phones, because people will call more complex problems. So I think this is the division that you will see. Simple things that are common or easy, or maybe large in numbers, should and can be automated. But the second people actually want to interact with you, you have to have skilled, capable people talking to your customers.
Excellent, it's good to hear. Don't forget there will be Q&A at the end, but also when you're networking, please pick the brains of these panelists with whatever they're saying. Mr. Ismail, so tell me, how important is it for UAE companies to adopt and move to this hybrid cloud model? Lots of talk about it, but we'd love to know your thoughts.
Okay, so as Frederick was giving an example, right, of fintechs and banks, I used to be a banker at the same time, right? So what we had as a challenge in deploying a new application, let's say for a treasury or for Forex or anything, to having those old style technologies you have it in, which is not automated also. It was taking maybe 6 months to deploy a new application, right? To go to market, deploy a new application, launch a product for the bank himself was taking 6 months. But at the same time, fintechs that most of the banks are fighting with, they are utilizing these cloud technologies. So to be able to, it's going to be a little bit technical, so sorry for that, but to be able to deploy a test and dev environment for a new application or for a new product, this guy is clicking a couple of clicks on a cloud provider in half an hour, 1 hour, their environment is ready for testing the product for developers and so on, right? So when this thing comes in, and you and bank services and fintechs are trying to give the similar products for the customer journey to the customers. So the banks has to be able to use and automate those platforms to be able to cope up with that, right? At the same time, same thing for SMEs or the UAE market also. Nowadays, online interaction or social media interaction is important for the customer to expand and touch more people in there. But from the SME's perspective, they cannot hire like heavy IT personnel to be able to sustain their infrastructure and so on, right? So they want to utilize it and charge it based monthly based and so on. And at the same time, to be able to use it in a flexible way, because cloud providers will be giving them flexible resources. They can expand in terms of if their product boomed on the market and they had 100 customers before, but now they have 1 million customers, right? In those old style IT infrastructure, you cannot expand as easy as on cloud systems. But why we say it hybrid cloud? So that's the key niche point, right? So nowadays, even SMEs, they can go to a cloud provider, any cloud provider, and deploy an e-commerce website there. Open package, charged by monthly, and deploy it. Then you customize it. You don't need to be an IT personnel to customize it. You can put your products there and so on, right? But why hybrid? It's because even in the banking industry, we use this terminology also. You shouldn't be locked into a one product only. You should be free to browse, right? So that's the mentality it should be. At the end, everybody is running stuff, and your revenue goes to your cost pillars, right? Which is IT is one of them. Which they don't like IT people in those organizations just because of that. But to be able to flexibly move around to other providers and anytime you want, that's the key niche point, I guess. So what I recommend, of course, utilize these cloud platforms as much as you can to be much more agile than before and expand as much as you can. But at the same time, design it in a way that you can jump into anywhere you want. You can move your application or you can move your platform anywhere you want. And of course, this will give you a price advantage at the end in terms of being flexible.
Yeah, interesting. But dig a little bit deeper maybe for the customers. What other barriers are there to execution or to migration that you foresee now or maybe in the future?
Okay. So we can put it this way. If the organization became close to become an enterprise, right? They already invested on IT technologies. From the financial perspective, when you go to your CFO or your financial director, they will be first saying that, oh, we newly bought this hardware or we newly bought this platform.
Yeah.
So let's compare the TCO and see it, right? So when you get into that, I see even myself, you struggle because from the finance perspective, they see it like a 5 years view of depreciation of the their technology. But at the same time, you want to be agile. You want to bring as much as product you want into your organization, right? So that's one thing. So the nice or advantage that startups or newly come products to the market, utilizing, going to the cloud journey from the start, it's much more beneficial for them. But if it's a 20 years organization that they have investment in their hand, which is running, that will be a challenge for them to say, like, how am I going to migrate? So that migration part from on-prem to the cloud, they struggle on the because for IT people, we like to be agile. For finance people, they need to put everything on numbers and make sense to them, right? So that's what I see as a challenge. To win the deal against the finance people,
Yeah, there's always an ongoing internal kind of battle going on. Yeah, Hans, please.
Just to comment on that, we're a government, so we cannot just put everything on the cloud. We have the sovereign data. That means if there's something on the cloud, it has to be in the country. So there's also some regulatory issues that we need to look at.
Yeah, on data sovereignty. Yeah, it's a very interesting topic that's just coming up actually.
So some of the big providers are now having their data centers in Dubai, so now it's possible. But I remember when we wanted to introduce Slack, because that was so hot at the time, we couldn't do it because we're not allowed to have any government data on a server somewhere in Houston or Frankfurt or something.
Same thing for the banks. If there's a customer data on it, the first thing is it has to be a government cloud. It has to be in-country cloud. And it has to be, this is what central bank looks at it, is it really a foreign company or is it like a local company? So I can control that company. So that's the benefit of some of the local cloud providers that brought it in. For the bank's perspective, you need to get an approval from central bank to deploy something in cloud. So.
Yeah, and some of the cloud solutions are actually super safe, but regulation is regulation.
Yeah, indeed. I love this interaction, by the way. I love this. This is what I expect. So more open interaction. Of course, there's going to be questions. Hans, explain what's the DSO's vision in terms of bringing digital transformation to SMEs within the UAE.
Okay, that's actually a great segue from what we just talked about right now. So Sheikh Hamdan, the Crown Prince of Dubai, came out with the master plan. I think it was 2040, I think it's called. Since we have now the largest congregation of startups in Dubai Silicon Oasis with more than 1,000 startups, it was, or our free zone was then designated to be the innovation and knowledge free zone. And so we try to up the game. Maybe we'll have 3,000 by the time the master plan has been completed. But what we have seen over the years is that the Dubai Future Foundation with the Dubai Future Accelerator and ourselves also have invested in startups, and there has been a lot of really interesting, disruptive startup coming to Dubai who have then unfortunately also left again. And why have they left? It's because regulation has to be ready for the innovation, and the corporate has to be ready for the innovation. So whereas, let's say the Dubai Future Accelerator had cohorts of 30, 33 companies coming in, not just small companies, sometimes also more established companies with very innovative solutions. And they basically did that for 11 ministries in Dubai. These ministries, even if they wanted to adopt some of this disruptive innovation, they couldn't. First of all, maybe they had not exactly the right engagement teams to bring the innovation into the organization or the ministry, and sometimes regulation was simply not ready. So our vision, and that's answering your question, is that we foresee a possibility where we will have some kind of regulatory board where we will have RTA, TRA, and whatnot, maybe Dubai Police, ourselves, on a top level, committee level, who will then produce the right regulation when the innovation comes. When the innovation comes, we will want to be the test bed in Dubai Silicon Oasis, and we've actually tested several things already. Let's say we're into space tech. We have Mohammed bin Rashid Space Center with us now. They're going to send up the rocket probably very soon with a rover to the moon, which is quite exciting. But we also had autonomous vehicles. We want to be the autonomous vehicle place in Dubai. Maybe in 5 to 10 years, you will see all kinds of things flying around. We actually have drone companies developing the drones. We have a landing spot for drones and things like that. So once we test the technologies in this, you could say, sandbox, then the results from these tests will then be played up to the regulatory authorities, who will then prepare the rules, and then we are ready to launch whatever it is that needs to be launched. We think that this is our vision of the future, and we will look at all verticals. If it's if it has to do with fintech, if it has to do with space tech or agri-tech and so on, and tackle each one on its own, and have some kind of a operator for that subgroup. We played this. We talked about this idea at the World Free Zone Conference in Jamaica. Of all places, I don't know why it's in Jamaica, but they thought it was a great place to meet, and I think they had a lot of fun. There was a lot of free zones from around the world who met in Jamaica. By the way, the World Free Zone Organization is something that was started by Dubai Silicon Oasis. Okay. Now they have hundreds of subscribers and members. We got a lot of good resonance from that, from this vision. It seems like it's not just a problem here; it's a problem in many, many countries. Mm-hmm. What do you do with the innovation once it's there? Because it's usually there. It's how you treat the innovation, which is important to give it a chance to develop or not.
Okay, very interesting. Frederick, for the customers, if they want to enhance their, I mean, you touched base on this slightly earlier actually, but if they want to enhance their customer engagement capabilities by using digital technology, how do they go about that? Where do they start?
You're giving me all the good questions, huh? I think you probably most likely start with your processes, which sounds a little bit more boring, right? Because you most likely want to go out like Yalla Compare and do a distribution or online, service for your customers. But again, if you don't have the handover behind the scenes between the processes, between the units, then the customer journey will be broken. Mm-hmm. So a simple data has very little to do with technology, but it's actually to try to go through an actual customer journey and understand where the handovers are between the teams, between the units, because you will find there are areas where the handover is simply not working, which is a super grievance for the customer, right? Because I've already given you this information, why are you asking again? Or you can see from a phone number who I am, so why would I need to? These things does not necessarily have anything to do with technology, but more how you work behind the scenes with the processes. So that's where I will start. And I just out of curiosity, does any of you know if you're working with Microsoft 365 in your businesses? Is there anybody who's working with Microsoft 365? Because I guarantee you, if you are, you're sitting on a gem of tools that you're unaware of. And especially also when we are talking about processes, Microsoft 365, they have something called Power Automate, which is a set of tools that I and you can use to automate your workflows. And that's exactly also an answer to your question. Because if you look at the workflows that you have across the organization, you will find there's a lot of manual workflows, there's a lot of handover papers or sign-offs between things, so you're waiting for approval here, you're waiting for approval there. These Power Automate tools, which most likely for all of you, if you have the Microsoft 365, they're free. You have them, access to them. You can sit down, it's called no-code applications. You can sit down and draw these workflows and publish them in your organization. And that is a fantastic, easy way of speeding things up and understanding where does the approval stop? Because all of a sudden you'll have it in a dashboard saying all approval stops with you. Say, why are you not approving it? Maybe you're not even aware of you have to approve it. But these things are a first step in delighting customers. So look at what tools that you already have available without investing and see how you can use them to make the workflows of the processes internally just a little easier, because that will reflect directly to the customers.
One thing I would like to add to it. So yesterday we were sitting down with my friend, and my friend is an automation guy, developer for automation. So what he shared was funny. I mean, and he said, he's been in this region for a long time, and he said, I've seen customers are trying to automate stuff that they did not do it on a manual way, right? So we've seen even the SMEs also, they try to buy a software or product from the aftermarket to say, look, I'm going to be much more faster, right? But then they understand that they didn't do that business before, they didn't do it in a manual way, right? Then they get stuck with a product that they paid for it. So the key element, yes, automation is must at the end, right? But you need to know those steps and flows that you're gonna be automating. That's another key element on it.
Yeah, to know those intricate details. Really interesting. So keeping on that, I know I asked you this before, Frederick, but I'd love to know from yourself, Ismail. I mean, what's the ideal balance between digitization and the human touch then?
That's the hardest question was there, man. I mean,
Save the best for last. The spice for you.
I was like looking at it. I was like, of course, there is no easy answer to it. At the end, the ideal touch has to be the business that you're running. Either it's a bank or either SME. You should not be stopped by these flows and automation that you need to be expanding, right? Or else you will disappear from the market. So that has to be there. But in the way of I'll give an example. Maybe it will be more clear. When I did my first automation project in the bank that I used to work back in 2011, the CIO asked me, okay, what are you saving here? Well, how many man hours you are saving here? So I collected all the manual, tickets that we were handling it before, and when we automated, I highlighted to him that it will be 22 man days a year. So we can get rid of 22 people from the IT people, right? So he was shocked, and he was also, he was saying, how are we going to highlight to the big guys? Then they will say, next year you are not going to hire anyone, right? So there is a niche part. So from the C-level perspective, of course, automation is perfect, but when you highlight it in a way that you're going to get rid of 22 people from your organization, then that becomes a concern, right? So in a way of human touch has to be there, but it has to be on the new platform that gonna come in. Of course, the business is expanding, and you need to utilize those people, right? So, of course, there is. I cannot give you a number, numeric answer to this one. It has to be in a balanced way that business will not be stopped growing. At the same time, the human element or human thinking has to be there in a way to balance it out. But sorry, I hope it was,
Bravo, you've done very well, Shmuel. You passed the test, I'm sure. We want this to be interactive, of course, and it's a great event, so I think now would be a very, very good time to maybe open up to Q&A. So I urge you to be curious, pick the brains of these panelists, please. So if there's anyone that has any questions, I'd like to now open it up to the crowd, just to see if there are any questions for our panelists. And by the way, if you can, just state your name and where you're from as well, please. Yes, sir.
Hi, my name is Surendra from Dubai here. So one question I had with all these digital tools that we have at our disposal, so I can see a lot of people from banking industry here. Still it takes a good, maybe 4 to 6 weeks to get a bank account in UAE, even though you get a license within a few hours. So why does it take this long with all these tools at our disposal?
But that's one of the reasons that I'm saying you can't just be a startup company and then disrupt this industry, because one of the reasons, this is compliance, this is regulations, this is workflows, this is legacy systems, and I can continue, this is culture. So you may have the best digital tools at your disposal, but you still have to marry them to a legacy system, to a bank or an insurer who have workflows, who have red tape, who have approvals, who have sign-offs, who have memos, and this is what you feel, and some of these things, maybe 4 to 6 weeks is a long time, right? But these are one of the reasons that new areas, it's just instant, but other areas which you feel are comparable is not simply because the underlying factors behind it. I'm not saying it's good, I'm just saying that's how it is at the moment.
Yeah, maybe I could comment on that as well, because it's a big challenge for us as well. If somebody comes to us and wants to set up a company, then automatically they go through this security check, and then what happens sometimes is that they pass the security check, and then they set up their company, and then they go out and they can't get a bank account. So then they come back to us and say, we just spent money on setting up this business, but if I don't have a bank account, I can't do my business here. And we know that some of the banks are using exactly the same sources as we do. If once you've been whitewashed, or let's say once you've been deemed clean, now there must be somewhere we can store this information so you don't need to be checked and checked and checked. You need to give your phone number again, you need to give ID number again, and you say, how many times do I need to give this number? Yeah. You know, and I think so. That just shows me there's a huge potential of collaboration and making sure that the journey is much easier for the client. The whole KYC process, in my opinion, is a bit broken. I think I could point on so many places where we could optimize the KYC, and it should not take 2 or 3 weeks. It should be instant, because the digital information on each person, we are actually very, very transparent. We are very transparent if you dig a little deeper, right? And this information, if that could be made available, so that for the banking, for the government, when we walk in the airport now, there they are forced to make it efficient. We cannot wait 2-3 weeks or days to go through the airport. It has to be like this, right? It doesn't work, and it works. So now we have this smart gate, which is great. You just click and then you go through.
But you are actually talking about one of the things that I'm talking about as well, because now just one of the things are the processes. You're dealing with a company somewhere where it says in the process you need a copy of, in my world for example, a salary certificate. You need a hard copy or a scanned copy of a salary certificate. Okay, so you have to get it, even though you already get it over here. But what we don't, what many companies don't think about is to ask, why is it we need a copy of the salary certificate, right? No, it's because it says we need it. Yeah, but why? We are very proud to be handling the national health insurance scheme for the Emiratis here in the country. And one of the things, in order to determine what level of insurance that you're eligible for, we needed some documents. Just to say, we needed proof that two people were married, which means that we needed a marriage certificate, right? And everybody had to take a picture and upload, and we had a person to look at it, and then you have to turn around to see, and then yes, we have the marriage certificate. But when we started optimizing this process, we asked, why do we need it? We needed to see that he is married to her. Okay, and now back to the government, because we have that information right at the government level. So we went and said, okay, if we can get an answer, or a yes or no if they're married or not, is that good enough? Of course it's good enough. And then we can connect through the ICA and UAE pass directly to ask, are they married? Yes, they are. Boom. No need for the document. So we took a process, this eligibility check, what was typically done in 5 to 6 days, now it's done in 5 to 6 seconds.
Wow.
Simply because we questioned one more time, why do we actually need this document?
Challenging the status quo.
And the salary certificate, we don't need that either. We just need to, in order to issue a specific type of insurance, we just need to know that this person is not making more than 4,000 dirhams per month. Yeah. And if we get a yes or no for that, we can continue, right? Yeah. So this is one of the reasons. They have some in the paper, they need this document. Yeah. They don't know why.
To give you another example, I was just talking to our president of RIT, Rochester Institute of Technology, is a university that's in DSO. I was just showing him a Houston-based startup who was putting what's called, their degree certificates, academic certificates on blockchain. Mm-hmm. So you have your own personal wallet with all your certificates on. It's what's called unfalsifiable. Mm-hmm. It's completely transparent. And if you need to send your certificates to an employer or to anyone who wants to look into it, you don't need to have it certified or attested and so on. I've just gone through that process myself because I wanted to, apply for a golden visa. Okay. Right? It has taken me, it was somewhere in the summertime, I asked a company to do this for me. And just last week, they said, now you can go and pick up your documents, which now have gone through, I think, the embassy here and there, and now it's been attested. Everybody has earned something on it. Yeah. And really, you could do it. Once you have a certificate, you tell the university, put it in my wallet, and it's in your wallet for the rest of your life. And anybody who wants to see it, you give them access to the wallet, and that's it. Nothing needs to be attested. A lot of people don't make any money on it, but this is how efficient the technology, you're making technology work for you.
Yeah, and that's what it's supposed to as well. Yeah, I'm just a little bit conscious of time, but what a fantastic question from the gentleman, by the way, which has opened up a whole new debate. So we will be stopping for a short coffee break. So again, I urge you to share ideas, pick the brains of these panelists, because I think that we're out of time at the moment, I'm afraid, and I can see that the mayor is giving me the nudge, which means I have to be quiet. So
he can give you 5 minutes if there are questions.
Is there any other questions from anyone? Yes. Oh, sorry.
I mean, we are all, my name is Nilat Haddad, I'm the CEO of Abada Group of Companies. We are all talking about, we are all talking about digitalization. According to my knowledge, that in 2018, 800,000 US citizens, they lost their jobs because their jobs were given to robots. And the digitalization sometimes means that many people will lose their jobs. Now We are 7.85 billion people. By 2030, we are expected to be 10 billion people. What will be the social impact of the digitalization on economies and on societies? And if there's anyone thinking of any synergy between the speed of digitalization and the social impacts?
I would love to answer that question, if
Please.
that's fine. Yeah. I've been asked that question many times. I've been on panels discussing this. I think there's a guy called Tariq Qureshi who's had a lot of panels on that. The fact of the matter is you either upskill, change what the market needs, or you will not have the same kind of great jobs in the future. But it has always been like that. Today there's about 3% of the workforce working in agri-tech. It used to be 1995. So we will always have these migrations from one industry to the next. As I was just mentioning before, developers in Silicon Valley, they fetch $500,000 in yearly annual salary because that is what is required. This is what is requested right now. And it's actually too high, right? So they need to disrupt that because, so if you look at, as I was saying to some colleagues here, I was in Armenia last week. Armenia is booming. They are taking advantage of the demand for developers. You have Russian and you have US companies flying into Armenia and driving the economy, the economic figures up. You have Synopsys, Cisco, a lot of Russian companies as well have situated there. And so this country somehow got the recipe right. They're not going to be out of, they're not going to have a lot of unemployment going forward. They have the right strategy. And let's say the country, I call my home country in Germany, they have huge challenges. We live close to a place called Ingolstadt where there's Audi, whatever they can have a robot do, they will. That means those thousands of people that are living around Ingolstadt, they're going to be out of a job unless they upskill or reskill or change what they're doing. A lot of them, they will go in retirement or even early retirement. But for the next generation, you need to follow the trend. You cannot stop the trend. And there's no way you can stop a multinational from not using AI or robotics if that means that they're going to save tons, many millions.
Okay.
You cannot stop them from doing that. Yeah.
And then Ismail, anything to add there or Frederick?
That's why right now we have too many YouTubers, right? So this new generation is like, I cannot go and work for the factory and let's do something else, like you mentioned. So there will be new things will come up, of course. In terms of making it automated and make that workforce automated is one thing, but at the same time, when you mentioned, right, even in the country-wise, you see in US developing an application, it doesn't make sense anymore. You move to somewhere else, India or Armenia in that sense. So that flow, it will be always there, and that will bring new opportunities for the new generation, of course. And one of the examples is YouTubing, right? So I've seen interview on the street that they're asking each young Generation Z person, like, what do you want to do? Everybody is saying, like, I'm trying to build my channel right now and so on. So the world is changing, so we need to adapt to that at the end. Yeah.
Very, very good question. And I know I'm getting pushed. There was a gent. I'm sorry, I'm getting away from it. But one more question from you, sir.
Yeah. So something that Frederick mentioned at the beginning was that we as business owners, as we got out of COVID, we got very excited with technology because we realized how much efficiency it added to our business and actually took out a lot of complacency, especially if you're an old business. But what was very important what he said was that a lot of personally happened with me, our tech infrastructure was not up to line with what we were bringing in. I personally spent few $100,000 dirhams on Salesforce, and at the end I ended it because my tech infrastructure wasn't allowing it to be utilized at its maximum potential. So what I want to ask is maybe a question for the bank. Like, it's easy for you to fund a new facility because you get a valuation report and see cash flows and everything. But a tech upgrade can cost from a few $100,000 to a few million dollars. You know, so how is the bank, how open are you to, funding a tech upgrade?
Is that to business purposes?
Otherwise, I would have ended the session.
Careful what you wish for, eh?
I agree with you. So we don't mind. And in fact, we are doing actually. You may not see it because you might not have asked it, but we have a separate division within the same broad segment. And we have equipment finance business where we are financing some of the tech investments which some of the customers make. And it's, in a way, if you see, it's a good business. You don't want to default on your tech investment.
So not just hardware, software too, development, everything costs a lot of money.
We can look into. I mean, why would it? As I said, we will pull your system. What are you going to do? So it's unlikely. We have solutions and we have to do. So this is from the commercial offering side. Since you have put me on the spot, even the earlier discussion, very relevant. We are looking into that solution right now, investing. And as the panel highlighted, all the points are relevant. There are a number of processes and handovers which are a problem, which we are trying to fix. And as Han said, now UAE Pass and other government-related technologies, they are available for us to integrate. There are platforms which are available to integrate where we can make these things a bit more simpler. So I think not only us, maybe other banks, you will also see them bringing into the play. But I think in the next 6 to 12 months, you will start seeing these things, at least from our side, being offered to you people efficiently. But test your teams, ask for these opportunities, we look into them. Thank you.
Thank you.
I will not ask.
Yes, I think that everyone obviously would like to go for a coffee break. So I do 100% urge you to ask more questions, any residual questions to our fantastic team of our panelists. So Mr. Ismail, Mr. Hans, Mr. Frederick, thank you so much.
Thank you.
Round of applause, please. We're going to be taking, I believe, a quick coffee break now. So over to you.
Yeah, just thank you so much. Thank you so much to the panel. Extensive topic, very exciting. I think we could spend a day on it, right? Just discussing technologies. I think it's what Adnan said. I think is just partner with the FinSec before they take your jobs and you have to shut down businesses. I think that's one of the important points. And $500,000, I think I'm in the wrong. I definitely need to upskill. But I think the pandemic has forced us into a faster pace of digitalization. Because it was like technology investments were like last in and first out, right? But now it's changed. I think let's digest all that. We encourage further interaction with the panel. Let's have a 15 minutes coffee break, and I urge you to be back maybe around 10:45, please. So thank you so much. Please join us for coffee. Thank you. We shall continue with the morning and move into our second panel discussion of the day. The topic, embracing a new operating environment. In this panel discussion, our panel experts will explore new operating models to remain profitable during an economic downturn and accessing affordable capital to accelerate future growth. On this, once again, I would request Mr. James Faulkner, Director of London Stock Exchange Group, on the stage as a moderator, please. Thank you, James. Thank you, James. I will also invite on stage our esteemed panelists for the second session. Mr. Haytham Abdullah, Unit Head, Investment Solutions, National Bank of Fujairah, please. Mr. John Close, CEO, Allianz Trade Middle East. Mr. Victor Jankowski, Global Head, DB World Financial Services. Once again, thank you all for making time for us today. James, over to you, please.
Thank you, Matt. Thank you very much. I hope everyone's had a nice coffee break. I can see lots of people talking and conversing and sharing ideas. The poor guy who was ringing the bell trying to get everyone in, and nobody wanted to come in, so everyone's doing the networking and sharing best practices. So thank you. Really good session. Panel number 1. This is panel number 2. I'll try to keep it on time, and I love the last session, the Q&A. So I do urge you, please put your hands up and ask the panelists the questions. So this panel session number 2, embracing a new operating environment. Mr. Haytham, we're going to start off with yourself. And on a macro sense, how are current market conditions affecting investment preferences, and what opportunities have these conditions created, if any?
Thank you, James. I think this question has become such a common start to different panel discussions at the time, and unfortunately, most of the time the answer would start a bit gloomy. Today, there are many different challenges that the global economy is facing. We have prospects of a recession, high inflation, rising interest rates, and a lot of uncertainty both on the geopolitical as well as the economy. Now, what does that mean to capital markets and investment? So today you're having one of the sharpest drawdowns across equity and fixed income markets. And to give some context to it, this is the sharpest drawdown in both equity and fixed income markets that we've seen in almost a century. Last time something like this happened was back in the 1930s. Now, obviously, this is some bad news for the markets. However, that also means opportunities for people that are looking to invest. Today, you have the ability to lock in, high quality bonds at very attractive yields that you have not seen before, at least for several decades. You have the opportunity to build into equities, start building that position at much better valuation, just 12 months from now. When we look at the different business cycles, the world economy always goes through different business cycles, and with every business cycle, there are winners and there are losers. It might be hard to, pre-forecast 10 years in advance what would be the winners, but it's always, there are some certain signs. So over the past decades, there was the big tech. Speaking to someone back in probably 2005, asking them, what do you think of companies like Facebook, like Microsoft, like Google, like Amazon? The answer might be different than if you ask him today. But these were the past decade's winners. Now, obviously, over the next decades, there could be new winners, it could be the same winners. That is something for us to see. So what approach should investors take is obviously one of the pillars that we use in the investment solutions is to be multi-asset investor. Investing a bit into fixed income, investing a bit into equity, obviously in line with the level of risk and your appetite and your objective, and build that position. And obviously remain invested. The market will have its ups and downs. You'll have bull markets, bear markets. I think one of the things that I noticed looking back at the past decades and the market performance is that market cycles have become much shorter and much faster. And I think that's mainly driven by technology and the speed to which information flows. Today, when, let's take a very simple example. A company announces certain news. By the time you click on that link, on that website to read the news, the market has already reacted and the price has already either shifted up or down. The market became much, much faster, and that led also to market cycles becoming more resilient and faster reacting to that news. So yes, there are risks, there are challenges, but looking at how the world has behaved, there will always be winners and losers. There's always be bull markets and bear markets, and that's just the nature of the market, and that's just something that I believe will continue to be, for the long term.
Very well said. It's the norm. It's becoming the norm now, I guess. Mr. Victor, tell the audience, please, Cargo's Finance. Explain more about this new fintech platform. Why is it a game changer?
Sure, thank you. So on our side, we've been playing a major role in the global arena for the supply chain, logistics, and warehouse facilities for quite a few decades. But in the meantime, we also realized that probably the trade finance part, was missing, So that was the major decision, to make our platform in place. So Cargos Finance is the part of the new sort of platform called Cargos.com. So we had a new fresh blood of management, who have come from the technology background. So just to segue back to the previous panel, we've realized that from the logistic perspective, it normally requires a lot of innovations and disruptions. Sorry for the cliche, but nevertheless, this is so. So traditional logistics has been a very much conservative, business. So we had quite a few colleagues who came from, let's say, Amazon, and those were the people who made actually Amazon, at some moment of time. So we invited the entire team for trade finance from various parts of the world. So I myself, I came from Singapore after 15 years in Asia, brought my experience, and it's a very interesting kind of bunch of people here, launching this business. So Cargos Finance itself has been here for slightly more than a year in order to address SME financing, supply chain finance, trade finance, and we were thinking how to change the agenda, how to be different, from the other players, saying that, hey, we disrupt this, $1.7 trillion. I think, James, this is one of the figures that is very well known among the market, thanks to Asian Development Bank. How do we disrupt this, $1.7 trillion of the underbanked trade? So we were thinking about this, from the logistics perspective, because we obtain data of the trade, of the underlying trade, container ship trade of the world, So at this stage in the DP world, maybe some people may not know about this, but we control almost 11.8, almost 12% of the global trade container ship. So basically, we have an enormous set of data for us to, to have this visibility and to provide comfort for lenders on our platform. So the key problem for the traditional banks and institutions is lack of visibility, of the SME. So if I'm an SME, I approach a traditional banker. Hey James, can I have a loan, from my organization? Normally, it's a long process. It's a lengthy, very cumbersome process. I, as an SME, I may not have an educated CFO, from some, esteemed university. It may be my, uncle who did some, accounting sometime before, but he or she may not have some entire experience in this field. So we help these guys, we help these SMEs to address this issue by providing visibility of the underlying trade, because we have this data. So basically, at this stage, we can cover more than 70 countries, all over the world, through our platform, and we have around 18 financial institutions helping SMEs to finance their transactions. So for us, for DP World Cargos Finance, it's been a journey. Sometimes I feel I came from the financial background, obviously. Sometimes I feel that I have to sell to internal stakeholders more than to external clients, because it's been quite a journey. It's been quite an educating curve, let me put it this way, in order to explain to the people from the traditional businesses how trade finance actually works. But DP World, has shown themselves as a very fast learners. Let me put it this way. So I joined the company less than a year ago, in last December, and in the corporate presentation, we were saying that we have 42,000 people in the world, and I was like, wow, that's a very massive figure. By June this year, we had 95,000 people. So company keeps acquiring new assets, South Africa, Europe, Djibouti, Senegal, all over the place, and we keep learning, from the new markets, and we keep educating new colleagues, how to help local players, BCOs, to address, trade finance solutions. So, in a nutshell, sorry, James, maybe it's been a little bit like vague, and I can talk about this for hours, but in a nutshell, this is where we are at this stage. It's still a baby, so we started last July, but we made, now we have around $500 million application for credits, on our platform, because we keep sort of encouraging, our clients and our colleagues to bring, more interest to our platform.
Yeah, no, thank you very much, Victor. And I think, again, obviously, if there are any questions later on, they can ask you, and at the end there's going to be another coffee break, so please ask what other questions that you do. Mr. Jean, so as Victor quite rightly mentioned, that the global trade finance gap grew to an all-time high, $1.7 trillion in 2020. So SMEs, how do they have access to that finance in order to trade their goods?
Okay, I think I don't know any financial institution that is not trying to crack this problem for SME. SMEs today in number represent 80 to 90% of the total companies in the world, and they are employing 50% of the staff worldwide. I think we just need to discard what happened in 2020 during COVID time, because as a financial institution, we all thought that it's going to be Armageddon. And fortunately for us, we had a lot of state support scheme that injected liquidity in the market to maintain companies afloat. What I think are the biggest limitation for SMEs to access financing, and this is where I joined a bit what Victor said. When you look at the profile of the SME, we are talking mostly about companies from 1 to 10 people. With no financial controller, no CFO, the accounting is mostly outsourced. So the financial literacy of the owner, of the manager is very limited, because most of the time he has a technical background on the goods and the services that he's selling. And then there is another limitation, which is his time, because in this company you see the owner that is working 12, 14 hours a day, running to his customer, running to his supplier. So he has potentially no time to put a file in order, to go to his bank, ask for a financing, wait 1, 2, 3 months to finally get the loan. However, what I believe is that now there are more and more tools on the market that are going to help the owner to bridge the gap to the bank. And what are these tools? For me, the software as a solution for the accounting tool, for example, because you can see that it's very powerful. You do your invoicing out of the tool, so this part is completely covered in terms of follow-up. And for the booking of your supplier invoicing, you just send a batch of supplier invoicing, there is an OCR, and the booking is done automatically. And this software, because they contain all the data, can easily anticipate working capital requirements and push a potential proposal to the SME owner. The second tool that we have also seen is all the peer-to-peer financing, funding platform. We have a couple of customers in our books, and what you see is that they are making the customer experience seamless. So you want an invoice financing, in less than 5 days, the SME got the amount on his bank account, which is pretty fast. And finally, the last tool, which might also come as a threat for the incumbent, but I reassure you also as an old traditional insurer, we're also in the same bucket. It is what we call the neobank. And especially in Europe, you see an emergence of neobanks that are specializing to target SME, because they perfectly understand the profile of the owner, they plug it to the accounting software, and they make all the journey to go to the financing much easier. So I do expect that technology in the coming years will definitely help to bridge the gap.
Thank you, Sean. Thank you. Very interesting. Mr. Haytham, if you can tell the audience what's NBF doing to help businesses overcome these challenges of operating in this new environment?
I think I can reflect a bit more on the previous panel talking about technology and innovation. And of course, this is not just for NBF. This is an industry-wide phenomena that we're seeing. The more technological solutions that are provided, making processes more efficient, ease of access to information, ease of access, for example, in my field to investment, that has helped investors reach their objectives and be able to do and transact much better. I'll touch on what has been, the overarching theme of which is technology and innovation and how that impacted both investments and banking. In terms of investments, what we see today globally is there is much easier access for regular individuals to access investments. Let's take, for example, today there's a very large number of high school students that invest and own stocks and trade through different platforms. What does that mean? Yes, there could be, they're just starting off, they could be speculating, but let's think 10 years from now, the level of compounding in terms of their financial literacy, in terms of their financial experience, and even in terms of the compounding of their financial returns. Someone who starts investing at the age of 18, by the time he's 30, there's a very large acumen of knowledge as well as wealth that could be accumulated in that time. Number two is the ease of transport of capital across different investments also led to the phenomena that we've seen, and as you've alluded to, the scarcity and finding enough developers in Silicon Valley, because obviously there's a very large number of VCs that came up in the last 5 years. That also shows us that a lot of flows have been going to funding innovation and technological development. That's on the investment side. And as I mentioned in the first question, the availability of information also made it easier for people to invest, more comfortable, more certainty, and which leads me to the second part of the answer is on the banking industry. I think if we look at the borrower-lender relation, a lot of it is driven by the level of certainty, and certainty comes from the availability of information. If me, as a lender, feel comfortable about your financials, the information that you provided me, I'll be able to provide you with more comfortably, with more capital, at more efficient cost, and be much more comfortable with that level of relation. Obviously, today we have much more information available about companies, about individuals, their creditworthiness, their transactional behavior than 10 years ago. And that's how I see the industry shaping right now. But if I look a bit into the future, I think the relationship between a bank and its client will go much further than just simply a lender-borrower relation. I think it will become more of a financial partnership. Today, when we look at fintechs, we see fintechs coming up with solutions where they're able to use AI and different algorithms and data analytics to forecast what a company will be needing in financial terms in the future. So, a simple thing that I can envision is, your bank could come to you and tell you that based on our data analytics, based on what we've seen through the history of your transactions, we typically notice that towards the end of the year you have surplus cash. Here's some investment solutions. Here's some short-term liquidity solutions that we are happy to provide to you. It could be the other way around. Perhaps, your bank as your financial partner could come to you and say, typically what we've noticed is that during this season, you require more capital. Here's some short-term funding solutions. And I think that's where the industry should head to, is more of a financial partnership, and that's how I see it. Of course, with the help of technology and innovation. I think one of the points that was spoken about in the earlier session is how banks can integrate technology. I do believe that typically the initial development will come from the fintechs and the startups. They will go through, the high-risk phase of the early development, testing it. But then banks can always look at what kind of technology works and acquire it and integrate it into their infrastructure and system.
That's the ecosystem then. Yeah.
Exactly.
Okay, interesting, really interesting. Mr. Victor, you mentioned Cargo's finance. So for the audience, what other digital solutions could they be maybe expecting in the future, whether it would be near or in the far future?
Sure, James, very good question. Thank you for that. So again, I was very carefully listening to the previous session, and I've noticed quite a few components actually syncing quite well, being aligned quite well with our journey as well. So I can say that the world in general and Cargo's finance in particular, we're being a little bit obsessed with the technology. So again, due to the facts that I mentioned before, that part of the team came from the technology industry, it helps a lot. It helps a lot to not to sort of to fantasize like whether it will work or not, but we already know how to help businesses on our platform. So I'll just give a very simple example. In our head office in Jobs, I bumped into our CTO, and he's like, "Oh, Victor, I wanted to speak to you. Okay, what about onboarding? So onboarding right now, how long does it take?" And I took this, like average figure, maybe like 7 to 10 days in general to onboard a new client. "Oh, no, Victor, I want you to do this in 60 seconds." So basically this is the entire kind of mindset of the senior management of the board, of the company, how to really disrupt the entire thing. And this is just one of the examples. Of course, what we have done, we have managed to approach quite a number of automated tools to our platform to make sure that, let's say, onboarding, KYC, compliance, credit much faster. So right now I can proudly say that we can onboard the client not in 60 seconds but in 2 hours, so but not in 10 days. So basically it gives a lot of comfort to our clientele and to our financial institution esteemed sort of partners. There are multiple examples. Let's say products. We keep digitizing new products for our clients. And again, being in the UAE, working here in a probably a global capital of trade, and traditionally for centuries has been a huge hub for trading between, let's say, India and Africa, for instance. So we help to local traders, whether they're of 10 million turnover or 100 billion turnover, to help them to address the products that they need. So not that we are approaching them and saying, "Hey, I will teach you how to do your business." They're saying, "No, Mr. Client, please explain us what kind of problems you have at the moment and how we can help you." So basically, invoice discounting, receivables, in-transit finance. This is all where we are being very much focused on. And to be specifically answering your question, James, about particular tools. So let's say right now we are working hard to digitize bill of lading, So and we have taken the next step, how to digitize house bill, because us being a global port, sort of provider, we are able to issue our own house bills. So basically, in order to help smaller SMEs to get even early financing, So let's say there's a client based in India. I'm not sure if many of you know. There's a place called Panipat in India, and there's a very tiny player, in this area, producing mini components, for machinery, and the largest customers are located here in the UAE. This company from India, they registered on our platform, and they applied for credit in a traditional way. Everyone rejected them, everyone, because poor balance sheet, lack of trade, history with the client, trade history, and so on and so forth. So basically, we decided, okay, dear Mr. Client, if you don't mind, let us work with you as a pilot project for this house bill program. So basically, what we did, we made sure that we could provide visibility of the trade to lenders, even from the warehouse stage in the rural part of India. So basically, we have provided this house bill from the warehouse stage. Then we managed to provide our railway facility. Then we managed to provide our Navasheva port terminal facility in India. Then Unifeeder, our shipping line from India to Jebel Ali. Then Jebel Ali port, then Javza free zone. So basically, from point A to point Z trade is visible. And this is why lenders, FI organizations on the platform, they love having this access, to visibility of the trade. And now there's a queue of another lenders, to the same player or to another players. "Oh, please, we want to finance your transaction because of visibility." And this is basically the same what Hetam, mentioned just now. Availability of data, and availability of data is a huge gap which I want to believe, I hope, we are addressing at this stage, and this is our big plan for 2023.
Yeah, no, thank you very much, Victor. But just to touch base on, I think you mentioned the CTO was looking at reducing the onboarding time.
Correct.
6 to 7 days down to 60 seconds. But doesn't that explain a bit about the culture and of an entity, though? Because it stems from the entity, right, itself and the culture. So explain a bit more about the culture then and how important that is in terms of obviously implementing these new operating, this new operating environment.
Well, I have to be careful with words. Yeah, but it's been a journey. So I think, there's a lot of sort of, like I said, mutual education, let's say, among us and trade finance division, towards logistic, ports and terminals, warehouse guys, railway guys, because basically imagine, I mean, you've been working for 25, 30 years in ports and terminal business, you may have very limited understanding of how trade finance works and why it should be addressed along with the logistic data, so basically every time when I speak to my colleagues, I have to explain this to them, why this would be important, not only for my business, but for their businesses as well, because end of the day, it will help to increase the trade. And end of the day, more TEUs would be sent through Navasheva, Mudra, Jebel Ali, you name it. We have 96 ports in the world. All of this, terminals. So basically, it's a very interesting journey. Every day, and I'm not exaggerating, every day I learn a lot of new things, from how logistic world works, how ports and terminal work. But nevertheless, I mean, it's very, very exciting, and I want to believe that it's very exciting for my colleagues as well to learn about financial industry as well.
Okay, thank you very much. Mr. Jean, hot topic, so inflationary pressures. So what's the best way to deal with this uncertain economic environment that we're currently living in? I know that Mr. Haytham touched base on it, but if you could allude a bit more, please.
So yeah, uncertainty is a big topic. One of the key words that I keep repeating the most to my team is that we are living in a VUCA world. And it has always existed, except that in terms of intensity and frequency, it has definitely increased. Usually you will get a crisis every 8 to 10 years. You never know what will be the trigger of the crisis. So we remember 2008, 2009, subprime. Then we had the COVID crisis, which was not known and with consequences that no one could ever imagine. And straight after, we went into inflation and war and Ukraine. So I'm always saying my team, you need to stay alert. And unfortunately, me as a leader, I cannot tell you that the world is going to be the same in the coming 6 or 12 months. When we look at inflation, we do expect inflation to reach 9% this year, to gradually go down to 6% next year. So these are our assumption. The only advice that indeed I can give is to make sure that the increase of your input costs that you are getting are passed by to your customer. But of course, you can only do it partially. And this is, I think, where we are also making the link with the supply chain, because supply chain management, and I think Victor can elaborate more on this, is going to be absolutely critical for the companies. We have seen pressure on the supply chain decreasing in 2022, mostly because the global demand was going down. My headquarters, the official line of my headquarters is to say that it will continue to ease also in 2023, but probably you have seen this morning that there is a 7 days lockdown in China, China being one of the largest producer in the world. So I don't expect this pressure on supply chain to really decrease in the coming months. However, what we are seeing is a lot of discussion about reshoring, nearshoring your operation, and what we believe also is that some countries will definitely benefit from it. We can name Mexico, Taiwan, South Korea, all the countries that we consider as friendly to the US and Europe for the exportation. And maybe my last advice on this is it becomes more and more critical to run a risk audit on the supply chain. And I think large corporates were really used to do it in the past, but now there is clearly a need also for smaller companies to do it, to evaluate the risk and to know what are the options at end. And maybe to close also on this topic, I think also we individually have also a responsibility, because sometimes I'm a bit surprised now by some value proposition of let's get your grocery delivered in 15 minutes or in 5 minutes. And I think maybe also in the future we should learn to wait for getting things done. I'm not talking about vital things, but nice things, they can wait a bit.
That patience is diminishing these days, right? That's a tough one. It's definitely a tough one. Mr. Haytham, if you can tell the loyal, faithful customers of NBF, it's a bit of a classic question, but related to markets, what keeps you up at night? What gets you worried?
Okay, I think that's quite a tough and interesting question. I think if I could say what could keep me up at night is in terms of markets, is the level of uncertainty that we're seeing today. We've been through recessions, we've been through inflations, rising rate cycles, but to have them all at once at the same time at this scale is something that we've never seen, I would say, any time in the past century. So, and things could go in many different ways. And continuing from my fellow panelists' answer is that in an inflationary environment, there are businesses that are able to do well. And in a rising rate environment, there are also businesses that are able to navigate. How will we be able to navigate, and how would the environment shift? That's something for us to see. But what I would like to say is rather not that what keeps me up at night, but what actually makes me sleep well at night is and this is a bit philosophical, is my belief in human nature. I think us as human beings, we have our survival instinct drives us to persevere and overcome the different challenges that are thrown to us. I think we should clap for ourselves. Just 2 years ago, we were facing a global phenomenon that we've never even expected. A global pandemic where global economy and trade have literally stopped. It halted. And I think, most of us remember when oil had no place to be stored because we were worried that we will not be able to use it. But 2 years from that time, look at us today. We survived, we were able to navigate. Thankfully, we're all here and we're facing the new set of challenges, and we will continue to face a new set of challenges. So yes, today we're facing, inflation, rising rates. In a few years from now, we could be facing a different set of challenges, but I do believe that it's human nature to be resilient and find different ways and different solutions to overcome this. And that's why I am hopeful and optimistic over the long run, and I think this is something that we should all look forward to. Yes, there will be challenges, but I'm sure and confident that we will find ways to overcome them and persevere and continue our economic growth.
Yeah, very well said. Humans are survivors, and we've been through quite a lot over the last 2-3 years. You've actually enhanced my next question to yourself, Victor. Actually, I was going to say, DP World, the solutions that you're offering sound exciting. The future looks very good. Love the culture, but what keeps you up at night? And on the back of Mr. Haytham, what makes you sleep better when it comes to this new operating environment that we're now living in?
Well, I'm glad that Mr. Haytham has this belief in human nature after some particular events earlier this year, and I'm originally from Russia. I lost a big portion of my belief in human nature, unfortunately, and it's not getting better. Reading all this news on a daily basis, but it's another topic, So I would say that at this particular stage, I'm mostly, I'm not saying concerned, but I'm mostly thinking about how to address some particular parts of trade. Let's say food insecurities. So this is a major global issue. This is coming, or this has come by different opinions. So let's say we're always at the edge of. Since we're always at the edge of logistics business, we have this visibility of whether it's going to be, let's say, for grains, whether it's going to be for cashew, whether it's going to be for rice. Now we see a big demand for fertilizers. Obviously, with all the talks about organic food and everything, it's a huge demand for fertilizers. And let's say fertilizer market at this stage, it's still so volatile. At one moment of time, we've realized with my colleagues that, let's say, the price for sulfur was, dropped down, 4 times in 1 week. So basically, we always have to be not only looking after this, day-to-day trade operation, how to move, a container from point A to point B, but to look a little bit in a 3 to 6 months sort of horizon. So that's what makes me not very great sleep at night because I always try to sort of to trace the news, and news I mean, they like what we discussed just now. They keep sort of bringing some new portion of news every single day. So yeah, let's all believe that human nature. It's all we're all here to survive. Humanistic human nature. And we are here to sort of to help the global trade or to address multiple issues which we face globally right now.
Okay, bravo, well said. Mr. Jean, no talk about sleep. What's your current outlook for global trade?
So before we were forecasting global trade to grow by plus 3.5% in 2023. We have revised down our forecast to plus 1.5%. This is for the volume, and in terms of value, probably there will be at least minus 1% coming from plus 10% in 21 and 22. The rebound, of course, after the COVID. I also want to say something about my sleep, if it's okay. I think it's a very, very interesting topic. First, I'm going to bed very early, usually in the evening around 9:30, because I wake up early. But I think for me it was much more what makes me wake up in the morning, because Allianz Trade, we are covering the risk of non-payment, B2B. And to give you an idea, we have worldwide 1 trillion of coverage. In the region, we have 12 billion euro covered. So when the COVID hit, there was 2 weeks, I was at home, I was like, oh my goodness, it's the end of the world. We will be obliged to call all our customers and to cancel all our credit lines. And of course, when you have customers, you tell them, look, we cancel your credit lines. Customers don't forget. So to rebuild a book of this size, it's taking ages. And at that time, I realized that I needed really to find a driver to wake up in the morning. And really, my driver was 2 things. First, our associates, because for me it was important to run the business so they can get a salary, they can make a living with their family. And the second thing is really to protect our customer, because the customers, they are trading. And I strongly believe that trades bring peace. So if you have a good economic environment when people are free to trade, everybody is going to benefit of it. Sorry for moving a bit away from the initial question.
Not at all, John. It was a very, very interesting answer. And instead of calling the session, a new operating environment, maybe it could be how do you sleep at night kind of session. So the last session that we conducted, I mean, I love the fact that Mr. Adnan stood up and answered some of the questions, and I saw there were some sort of tentative hands kind of going up. So I'm going to open it up to Q&A to the crowd now, and then we can go back and maybe ask some questions to the panelists. But I really think it's, get as much juice as you can out of these panelists, ask them the questions, and gain that intelligence. So my question is out to the esteemed audience now. So please, any questions that you do have, let's ask them, and let's create some conversations.
I actually have a question.
Yes, please. I don't know if the microphone as well. I don't know if anyone has a microphone. For the gentleman at the front, please. Thank you.
If you are not going from me, because this is my
I love the interaction. You get extra points, by the way. By the way, guys, points. If you ask a question, you get extra points.
Hello, my name is Nidan Haddad. I'm the CEO of a group of companies. We are in food packaging, and we export and import a lot. So my question is to Mr. Vector and to Mr. John. Last year, I believe in March, His Highness Sheikh Mohammed bin Rashid announced an initiative called Operations Manufacturing 300 billion, where the target of this initiative is to increase the investment in factories in the UAE from 131 billion to 300 billion in 5 years. Does DP World have any plans to be a part of this by supporting us being manufacturer here, by giving us reduced rate for the import or for the export or for the terminal handling charges? And for Mr. John, we have tried through the last probably 30 years working with credit insurance. We are working now with Daman. We try to work with Euler and Hertz and with COFAS, and always we were facing challenges that big companies like Euler and Hertz and COFAS, they are looking for
customers and receivables that they are really secure without having the necessity of having insurance or then, and they run away from the customer that there's a bit of risk. So there is no risk appetite where we found that we are not covered and we cannot grow our business with a less secure customer. So do you have any plans to improve this, taking in consideration that now we have a big opportunity to export to the EU due to many factories are closing down because of the energy crisis? Thank you.
Thank you very much. Let's break that down, and you might have to repeat the question unless you can remember that, Jean, but Mr. Vitz, if you can answer the first question, please.
Oh, excellent question. Thank you so much for that, sir. So, I mean, I can speak on behalf of financial services branch, partially for the whole group. So right now, and literally right now, we're talking about Q4 this year. Me myself, my business, along with the regional groups, regional UAE, regional subcontinental India groups, we are working on so-called bundle solutions. By bundle solutions, I mean to say that I normally create some sort of a credit memo, for our entire board and treasury, indicating, how else we can help our esteemed clients, not only from the trade finance perspective, but also from the logistics perspective. And what sort of course, I'm showing what sort of revenue, we can make for the group, but I'm showing what sort of like additional rebates, additional perks, additional discounts we can provide to our clients in order to attract them more of utilizing DP World's entire ecosystem, whether it would be DP World itself or our external clients through house build solutions, So basically what I've seen recently over the past 6 months, I came here on the impression that I would probably be financing more transactions from, let's say, India or Asia or some other markets, but in fact I was partially wrong, because I would say at least 50% of the transactions that we normally finance, they come from the UAE, and I'm not talking about just traditional traders. I'm talking about proper setups, adding value to the economy, doing some bits and pieces of manufacturing work, I don't know, packaging, warehouse bits, and so on and so forth. So overall, I mean, what you're saying, I've seen it, on a daily basis, because we keep having more and more number of applications to our platform from the UAE-based companies, and that's why we realized that we must address this kind of, growing number of requests by providing this, kind of bundle solutions. So I'm happy to speak to you after the event, and we can discuss in details. Thank you.
Thank you. Mr. Jean?
Yes, so on the trade credit insurance part, I understand your frustration because the product is a beautiful product to cover invoices. However, we have limitation in our business model in itself and in terms of capacity. What you need to realize is that Allianz Trade, so formerly, it's a new name for RMS, is doing an annual turnover of 3 billion euros, and as of today, we are covering 1 trillion euro of transactions worldwide. So you can clearly imagine the proportion that we are covering. And all the coverage that we are granted are without guarantee. So basically, you go on our system online, you enter the trade register of your buyer, and we tell you, yes, no, we guarantee you in less than 5 days, you have your answer. And I think because of this, because of the easiness to get the coverage, it means that we need to be selective on the buyer that we cover. And one of the key principles to cover buyers, two principles. The first one is access to information and access to reliable and transparent information. So clearly, in some of the countries, we don't issue cover because the franchise system is not organized well enough. And the second pillar, which is very important for us, it is the collection. So you don't get your invoice paid. We need to be sure that we can undertake action to try to recollect. And that's why in some of the countries we are extremely restrictive because we don't have presence and we don't have access to the information. And also to explain why we are selective. What you also need to understand is that we are under the Solvency II regime in Europe, and this regime is extremely stringent the way we are looking at the risk. So the regulator is really looking at all our grading methodology, why the buyers are graded there, what are the criteria. So we really need to ensure consistency and I would say justification on why we are providing a credit limit. I think in the future, one of the way what we are exploring is really to try to bring trade reinsurance like us in combination with, for example, ECA, to bring an additional capacity top up. But I would be happy also at the end, we can look at your buyers and do an assessment and to see if our appetite or risk appetite has increased. And maybe a last number on our side for the region, because you mentioned our involvement in 2020, beginning of 2021, I told you 12 billion exposure. Only for our customer here, we had 2.7 billion euro exposure, and this has grown as year to date to 5.6 billion euro exposure. So we are definitely bringing a lot more capacity to the market.
All right, thank you. Does that answer your question?
Yeah, thank you.
Okay, great. Extra points for yourself, though, anyway, for asking. Anyone else to the audience? Any other questions for our panelists? I have one more question out to the group actually. So, how can businesses accelerate growth in the future? Quite a broad question, but I think it's still a very pertinent one. So I don't know if anyone would like to take that.
Yes, definitely. This is a very, like you said, a broad answer to a very broad topic. But I think it's more about the principles that any business can follow. And I think one of the main principles is especially in this day and age, is the quick adaptability. The world changes very, very fast, and you have to be ready. You know, client demands changes very fast, the market dynamics changes very fast, and you know, even on a macro level, these things could change very fast. If you just go back just 2-3 years from now, even pre-pandemic, most of the you know, news outlets and the financial news outlets was talking about that central banks are struggling to reach their inflation target. You know, fast forward a few years, and banks are actually central banks are actually struggling to bring down inflation. So these things can change very, very fast. So I think adaptability is a core principle that businesses should have. And I think, like we said, you know, and we've touched on by all the panelists, is that the availability and flow of information is essential. To see that, okay, you know, I'm not just, you know, the market data is there, how am I reading it, how am I analyzing it, and then how am I reacting to it, is another important aspect to be adaptable and be, you know, very responsive and agile.
Yeah, no, very interesting. So anyone else?
Yeah, well, I mean, I think, you know, what, you know, Mr. Haytham said just now, I mean, it's quite, like, you know, widely covering, you know, the topic. You know, I can just say that I've been on this journey, you know, with, you know, trade finance organizations, you know, for, you know, many years, and I have seen the transition, which was in the entrepreneurs, you know, CEOs of the world minds, you know. So from the, I don't know, last resort stigma as a trade finance towards more conventional, more vanilla kind of, you know, mechanism and tool, you know, to, you know, sort of develop their business. Because I remember very well, you know, my times, you know, when I traveled to China, and I was looking after the entire Asia Pacific region, and China was a huge chunk of my business. When I spoke to some local entrepreneurs, SME companies from Shanghai, Shenzhen, that doesn't matter. And my question was, how do you grow your business? You know, how do you address, you know, new markets? I mean, let's say you're dealing between China and the USA. What if tomorrow you want to deal with, I don't know, Peru, for instance? You know, you want to sell your bicycles to Peru. How do you address your growth, you know, through the local banks? Oh, I'll go to my bank. That was done. Okay, but your bank has some limited capacity, right? You know, so they cannot increase your credit lines. You know, it's not a rubber band, right? You know, it has some limitations. Okay, the answer number 2 was, I'll go to my relatives. You know, but, you know, relatives, you know, also have some limited capability. The third answer was maybe like very much Chinese, loan sharks. So and they didn't even think about some other ways. Then credit insurance, Silent Insure was a big player in the region, but again, it was very much limited. And then when I was explaining about how trade finance works, that we take visibility of the trade, not only your buyer, but on the entire thing, for them it was like an eye-opener. So I would say, maybe to answer your question, James, and to repeat maybe the same what Haytham mentioned just now, being agile, being very much not reactive but proactive, to the market changes. I think that what helps entrepreneurs of the world to grow their business in much faster nowadays.
Okay. Thank you very much. One more question, which I love, and again, it's out to the panel. So, how can businesses access affordable capital amid the current economic conditions? So, it's again quite a broad question, which I'd love your thoughts. I don't know, Mr. Haytham, if that could be, you could touch base on that just a little bit.
I think we touched a bit on it in the earlier answer. See, the cost of capital at the moment is mainly driven by obviously the benchmark rates, which are set by the central banks and which are basically reacting to the different economic conditions. But the margin above that benchmark is driven obviously by the credit, what we like to call is the credit spread, or the level or the price tag associated to the creditworthiness of the borrower. As we said that the more information available to the lender, the more transparent, the more certainty the lender will have and be more comfortable in giving that capital to the borrower. Of course, right now, over the last 5 years, we've seen also different means of accessing capital, such as securitized assets, private credit funds, VC investors, startups, crowdfunding platforms. However, I still believe that the majority of capital is provided by banks, and they have the right infrastructure to provide capital at a very large scale.
Mm-hmm. Okay. Mr. John, anything to add onto that one?
No, it's very valid what has just been said. The cost of capital, it's the lowest over the last 30, 40 years, but the highest from the last 10 years. I think it's turning back to the strategy. I think if the company has a right strategy, it will continue to strive and continue to be able to invest and finance the investment. To come back to your previous question, I think part of the strategy, what is very important, is to be capable to do a trade-off. And what we just discussed, when I'm looking back 4 or 5 years ago, we would be ready to sign any customer, and then to create frustration to the customer because the acceptance rate is not in line with what's done at the beginning. Today, we are doing trade-off and explaining why with some customer we cannot work because it would not bring value for the customer and also for us. And in a way, trying to nurture a long-term relationship and also to see what are the growth areas with a potential new value added that we can bring to this customer. And then if you manage this, if you have perspective, you will still continue to finance your equipment, kind of business and so on.
Yeah, exactly. Victor, anything to add on that one? I think we've pretty much covered it all, but just in closing, it'd be nice to hear your thoughts.
Yeah, well, first of all, define affordable. Because I would say that maybe every second discussion that my team and I are having nowadays is it's all about the price, it's all about the cost, and it's all about us educating our clients about what software is, how software has been changing over the past, not months but weeks, I would say, and how does this affect to the end pricing as well. So basically, I would say it's a challenging moment right now, and this is one of the reasons, what makes me up at night, how to grow our portfolio, in light of the sort of, cost of funds, but nevertheless, I think, to answer your question is, again, digitization. I think, by digitizing and removing some bottlenecks, and accelerating the process, I think it definitely helps to provide more affordable financing, to the clients.
Mm-hmm. Thank you so much.
I think one more point I'd like to add to that is from my experience, I've seen some business owners that are very reliant on things such as the interest rates, and it had that they were working at very high operational leverage, that any change in interest rate would significantly impact their businesses. Being in such a business model, I think it's very prudent to explore hedging solutions that would reduce that risk for you. Yes, it's very difficult to forecast where interest rates would, how would they behave over the next 5 to 7 years. But being able to minimize that uncertainty, again, will help you make much better decisions. So that's also another very key aspect of managing your cost of capital.
Yeah, very well said, Haytham. Thank you very much. I've got a question, a hand up. So extra points for that gentleman. Yes, please. If you could state your name and which entity you're representing, please.
Hi, good afternoon. Is it afternoon, I think? Almost. I represent National Bank of Fujairah, the Treasury Division. I have a question for Victor with regards to DP World and its position as a global logistics operator. Given that most of our customers here, and a vast number who could not make it for the session, have been in some form or shape impacted by supply chain disruptions, how can DP World assist in, let's say in the future, if not now, overcoming such a challenge that they have this outreach across 90 plus ports, I believe, globally, that if there are potential expected supply chain disruptions due, how can they assist the information they have, the outreach they have, back to the customers who operate from the UAE?
Well, it's a very good question, and I'm not sure if we have enough time to discuss it in detail. But just to give you a very quick answer, I mean, right now, like I said, we do our best to make sure that the entire global ecosystem that we cover, this 95 plus ports and terminals that we own, I mean, we have the entire visibility for the whole business. And let's say, being based in the UAE, I want to say that I should have this visibility of the trade, let's say in South Africa, for instance, or in some other regions. So how do I do this? By understanding more about their business. How do I understand more about their business? Is to help them to grow their business. By them, I mean my colleagues from those respective regions. So I'm not sure if it's broadly answering your question, but nevertheless, it's a bit of a journey, and maybe there is no magical recipe, one size fits all, but I think we are on the way to address this problem.
Thank you very much for the question. Any other questions in closing? Anything from the panelists? I think that's it. Yes, and also I've been given the nudge to the time. And just a last one. Thank you so much, gentlemen. Really, really insightful, and I really urge everybody that once this is done, then just please pick the brains, approach people, build these relationships, start engaging, and thank you very much to NBF for arranging this amazing event. And I really hope there's going to be a lot more of this face-to-face interaction. So please give a round of applause for Haytham, John, and Victor.
I think we did survive. We are survivors. We did survive 2 sessions. I hope nobody slept either, right? So, I think one of the things you said, Jean-Claude, very, very interesting. Trade brings peace, right? I think we're going to note it down and quote you on that. I think very insightful, a lot of takeaways for our SME partners. I think an important message being reiterated again and again is build a technological sense. See what else there, what you can invest in, and do the right investment to stay ahead of the curve. And I guess adaptability to the new operating environment. I think with that, thank you so much. If you can join us on the table again, thank you, panelists. And I would, yeah, please. I would now like to invite Mr. Rehan Ali, please, the head of business banking at Bank of Fujairah, from some final remarks. Thank you.
First of all, thank you everyone. It's really good to see so many people in person, our customers after a hiatus of almost 2 years plus. I believe more of such events will be coming. Please give us your feedback, how you find this. As we discussed earlier in the day, the world is going through so many challenges, but with every challenges there are opportunities. Let's look at them, how we can work on this jointly with you. Before I proceed any further, a big round of applause again for our panel members for giving us such extensive insight. One thing is for sure, we being in the service industry, for us customers, you people are the most valuable asset we have. And whatever NBF today is, where it has reached, it's because of your support and cooperation. And we look forward for a continued support to take NBF to new heights.